Hey there, everyone. Welcome back to our channel. I hope you're all doing well today. If you've ever found yourself wondering how banks make money, you're in the right place. You might think banks are just places to keep your money safe or to borrow a little cash, but there's a lot more going on behind the scenes. So, grab a comfy seat and let's dive into the fascinating world of banking. Now, you might be asking yourself, what exactly do banks do to turn a profit? That's a great question. Let's break it down step by step. First off, one of the primary ways banks make money is through interest. When you deposit money into a savings account, the bank doesn't just let it sit there. They take a portion of those deposits and use them to give out loans. Here's how it works. Let's say you deposit £1,000 into a savings account that earns 1% interest. The bank, in turn, might lend that money to someone looking for a personal loan at an interest rate of 5%. So, while you earn a small amount, the bank makes a profit from the interest charged to the borrower. This is known as the interest spread. In fact, according to the Federal Reserve, the average interest rate on savings accounts in the United States is around 0.05%, while personal loans can average between 10% to 36%. That's a significant difference. Banks are essentially the middlemen, making money off the difference between what they pay you and what they charge borrowers. Now, that's not the only way banks make money. They also charge fees for various services. You might have noticed that some banks charge monthly maintenance fees for checking accounts, ATM fees for using another bank's machines, or overdraft fees if you spend more than you have in your account. According to a 2022 report from Bankrate, nearly 30% of checking accounts have a monthly fee, averaging around £15. If you multiply that by the number of accounts a bank has, it adds up quickly. These fees contribute significantly to a bank's revenue, alongside the interest income. In today's digital age, banks have also tapped into technology to create new revenue streams. Digital banking has become increasingly popular, and many banks have started offering online-only services. These banks often have lower operating costs, since they don't maintain physical branches. They can offer higher interest rates for savings or lower fees for loans. For example, a digital bank might offer a savings account with a 2% interest rate, attracting customers looking for better returns. Although they might pay higher interest, they save money on branch maintenance and staffing. This strategy allows them to attract customers while still turning a profit. Another major area where banks earn money is through investment banking. Investment banks help companies raise capital by underwriting stock and bond offerings. They also assist in mergers and acquisitions, providing advisory services. For instance, when a tech startup decides to go public, they might hire an investment bank to help them set the price for their shares and navigate the complexities of the stock market. The fees for these services can be substantial, often amounting to millions of pounds. And let's not forget about trading and asset management. Many banks operate trading desks that buy and sell securities, making profits from the fluctuations in market prices. They also manage assets for wealthy clients, charging a fee based on the total assets under management. This can be a lucrative business, especially in a booming stock market. So, to sum it all up, banks make money through several key methods. 1. Interest spread. They lend money at higher rates than they pay on deposits. 2. Fees they charge for various services, from account maintenance to ATM usage. 3. Digital banking. They leverage technology to reduce costs and attract customers with better rates. 4. Investment banking. They earn fees helping companies raise capital and navigate complex financial transactions. 5. Trading and asset management. They profit from buying and selling securities and managing wealth for clients. Each of these avenues contributes to the overall profitability of banks, allowing them to serve their customers while reaping financial rewards. Now that you know how banks make money, you can appreciate the complexity and innovation behind these institutions. It's not just about keeping your money safe, it's about a whole network of financial activities that drive the economy. If you found this video helpful, be sure to give it a thumbs up and subscribe for more educational content. And let us know in the comments, what other banking-related topics would you like us to explore? Thanks for watching, and see you in the next video.